Good morning, good morning. How you guys doing today? February 27, 2024. And we're back together. We're going to take a look at the markets again for this day, and we're going to get ourselves prepared for what might be coming today. And I would like to open it up to you as well if you have any requests for charts that you'd like to look at before we end the session. We'll take a look at the ones that you suggest. So if you could start by hitting the like button, I would really appreciate that. And you can leave requests in the comments to this tweet, and then I'll check them before we move along. All right, so just scanning the news this morning and taking a look at what we were discussing yesterday. And I thought I would bring up Berkshire Hathaway because yesterday I was talking about how it looks like they're using the positive earnings of Berkshire Hathaway to lure retail traders into buying. And as you can see, we got a significant drop yesterday. I mean, was pretty significant if you take a look here. I mean, look at the drop, okay? We had price open up in the, $429, and it dropped down to $409, okay? So what's going on here? Well, I went long Berkshire Hathaway when nobody was really talking about Berkshire Hathaway, and that's what you want to do. You want to try to time your entries in spots where the big money is buying, but retail isn't thinking about it, okay? So if we have this trend line here drawn, let me just draw this trend line here for you so you can take a look, okay? Take a look at this trend line, all right? It's an descending trend line. And look at the move away that we got from it, okay? Look at this. I'm going to draw that, and I'm going to draw that, okay? This is an ascending trend line on the weekly chart. Look at the move away that we got, and look at the move away that we got here. So it's overextended, right? That's why I would not be buying it here, because it is overextended. When you look at the formations on the charts, you can see that it's way overextended and it has room to drop, okay? So that's looking at the weekly chart. You look at the daily chart, way overextended as well. And on the monthly chart, we have two massive momentum candles. And it's usually after two massive momentum candles that we have some pausing, and then the next move takes place. So I'm waiting to see what's going to happen because we're likely going to get a candle of pausing. And we're in February. February's not over yet. So let's wait for February to finish. January, February, March. Then we have March. March will probably be a consolidation candle at the highs. And then we'll see what takes place with Berkshire Hathaway. All right. So that's kind of what I'm looking at when I'm looking at Berkshire Hathaway. I'd like to get back in, but I think now's not the time to be doing that. So I was scanning the headlines for today, and one of the headlines I came across was BMO misses on weak capital markets. BMO is a stock that I was interested in a while back. We had a long signal go off back here at $87. And we also wanted to wait for a pullback into this area here in the $80 for a move to the upside. And we definitely got the move to the upside. We had a weekly target right here, weekly target. Let me just open up this chart here so you can see. So our long signal was here. Our weekly target got hit, okay? And our next target was up here in the 102s. So I am expecting eventually price will get up there, but I'd like to participate in this stock again. It's just I'd like to see it drop before getting back in. So this BMO misses is pretty good that they missed, because that's going to bring in some weakness. And we can see pre-market BMO right now is $91.98. It closed $93.88. So we'll see if that wants to continue with the pressure to the downside. All right. So that's something that I am definitely watching. Another thing I thought was interesting, LUNR. Have you guys seen this one? LUNR. Apparently, they are the ones that make the what do you call it? The moon lander that went to the moon. Okay. Well, it landed sideways apparently on touchdown, so it hindered the communications and solar charging capability. And talk about a pump and dump. This is just nuts. Okay. All right. It was $3 right here, $3.50. And then they advertised they landed on the moon, yes, this and that. It went up to $13. All right. If that's not a pump and dump, I don't know what is. I mean, that is just madness. Okay. Total madness. And, you know, I look to the side here and I see something here worth mentioning. Right here. Okay. It's a massive area of supply. I mean, do you think it's a coincidence that price went all the way up to $13 before dropping? I don't think so. I don't think so. But whatever. You could think whatever you want to think. But I think it's very curious how it went exactly to an area of supply, $13. And then some bad news came out, and all of a sudden we get this big drop in price. A little suspect in my book, but I don't know. What do I know? So I thought that was interesting. I wanted to point that one out to you. Another headline that I saw was Scotiabank reported first quarter net income, $2.2 billion, up from $1.76 billion. So pretty good for them. And so I was looking at their stock and I was thinking, okay, what are we gonna do with this one? Is there anything that we can do with this one? Well, one thing I did notice is that its stock is reacting to an institutional buy zone here. Okay, as you can see down the $56 area, that's an institutional buying zone that price came into, and now we're seeing the rally up from. So dividend is really good, 7.44%. It's a good stock to buy and hold if you're looking at accumulating wealth. You know, with these type of stocks, when you're looking at accumulating wealth, you want to buy it in an area where you, where the banks are buying, okay, where the institutions are buying, where the old money families are having their family offices buy the stock. And this is pretty decent. I mean, we were at 92, dropping down all the way to 50 into this buying zone. It's pretty decent. I see like a big roadblock here. And if we can get past that, there's nothing to stop it from getting above the 72 area. Okay, that looks pretty good to me from what I'm seeing. All right. What else did I see this morning? Yeah, they're talking about rate cuts are likely to be slow, but not necessarily steady. Yeah. There's a saying about the Federal Reserve manages interest rates, how they manage interest rates, that they go up the escalator and down like the elevator. But this is not what's happening this time. We went up so quickly, and now they're saying that it's going to come down very slowly. And that's fine because, you know, we've got sectors like one that I wanted to show you here. Let me see. Go to my ETF section here, XHB. Have you guys seen XHB? Okay, the Home Builders ETF. So I've been watching this one for quite some time. And I noticed how the big institutions were buying it here. They retraced it, and then it's been like a rocket ever since. I think, and this is just my thought, I think that when interest rates start dropping, we're going to see a big drive up in the real estate market because people will be coming back in and flooding the market with purchases of properties. So I think anything related to the home builders is going to be good. I've been looking also at the XLRE, and that's the real estate select sector. This one's pretty interesting. It responded to supply, and it responded to supply. We got two areas of supply, monthly, weekly was the latest. I've been watching for another decline down to this $36 area. And if it gets there, I think this thing will shoot up like a rocket from there. Just my personal opinion, but boom, and then do something like that. So I'm watching that one. I'm watching XHB. New demand is coming into this market right now. I think this could go even higher. And it's something that I want to keep on my watch list going forward. All right. So this is the one that I'm talking about. You can read up on it, XHB. And yeah. Zoom. Yeah, I was looking at that. Zoom. I was tracking Zoom for quite some time until it broke through a really, really strong, well, I thought was strong, demand area. Let me see. Which one? This is the one here. This is the one here. Yeah, here we go. So on the monthly chart, we had a significant area of demand down here. And as you can see, it just ripped right through it. And when demand gets ripped through, that means there's nothing to support price. I'm not going to invest in something that is not being supported by the big banks. I'm sorry. I'm just not going to. I don't care, right? And so that's why I took this one pretty much off my watch list and stopped watching it, because I was expecting, maybe something like this to happen. I didn't invest in it. I didn't want to, risk my money with this stock unless I saw proof that it was going to hold. And it just broke through. And so I pretty much removed it from my watch list. But hey, it's up this morning, and that's great for them. But I don't see how this is going to maintain itself. Okay. It was making a ton of money during the COVID situation, and for good reason. But we haven't had a situation like that for some time. So I don't see any reason why it would continue to do well. All right. Bitcoin. I want to go through Bitcoin really quickly. Look, we had, let's do that. Bitcoin. We had significant buying coming in. I told you about this. All right. I told you about this. And I mentioned it, that we had significant buying coming in here. Okay. As price was dropping in, I said, this is a significant buying area that Bitcoin is coming into contact with. So this is something that you want to pay attention to. And lo and behold, look what took place, okay? Significant buying. And take a look here. This was more of demand coming into the market. And what happened? Price dropped into the demand area, and now it is jetting to the upside, right? So now we're seeing a lot of articles online about Bitcoin. And I saw one just on here. Let me see if I could bring it up. Yeah, let's do that. No? Okay, let's try this one. Let's try this one. Here we go. Bitcoin could hit 88K. Bitcoin could hit 88K by the end of 2024. You know why you better be careful with a comment like that? It's because if I look at the monthly chart, you know what I see? What's screaming at me is this massive, massive area of supply here. And as you can see, we just made contact with it. Okay. And so why is this important? I'll tell you why it's important. Because this is the area where the massive selling took place, okay, back in 2021, after we reached all-time highs. Massive selling came in here. And so we suspect that there's going to be another reaction to the downside here. Bottom line is we never know 100% what kind of reaction we're going to get when we get zones being contacted. But this should be a big warning to everybody trading Bitcoin that because you don't know how it's going to react, and the bias is there's going to be downside pressure, you should not be buying Bitcoin at this point. This is a place to be taking profits on Bitcoin. I mentioned those buying zones already. Those were the areas where you should have been buying. This is the area where you should be selling, all right? So when you see headlines coming out saying that Bitwise analyst says Bitcoin's going to go to 88K, you know, this is after getting everybody so excited because price just rallied from 40s to 56s. And what do you think they need up here if they're going to take profits on positions? They need people to take those long positions off of their hands. So I would definitely be staying away from Bitcoin, okay? Because I think it's way too risky. You should be taking profits right now. And the fact that headlines come out like this saying Bitcoin could go up to 88K, this is exactly the headlines you would want when you're taking profits on a long position, okay? So just be extremely careful with Bitcoin is what I'm saying. I don't want you to fall into the trap of buying when big institutions are taking profits, okay? A couple more left. Euro US dollar. We see the continued upside pressure coming in on the Euro US dollar. Also, one thing to notice is since yesterday, remember we were taking a look at retail sentiment. Retail sentiment was at 73% over here, okay? 73%. Price didn't decline. Instead, it went slightly to the upside. Now it's 77%. You remember what happened when we got to 80%? Okay, we had this, and then 82%, and we had this, okay? But nothing has been extremely aggressive to the downside yet. So keep an eye on it. I am not short yet. I want to get in short. Now's not the time, but I am watching retail sentiment very closely, all right? And then we'll continue to track it throughout the week. And last but not least, the US dollar, Japanese yen. We had that drop into the buying area. We got price moving to the upside. I want to take it down to the 1 hour chart here and see the dynamics of what's taking place. And one thing I want to point out to you is this shift that we had down here, okay? We had price contact the buying area down here, and we had the break of the pressure to the downside. And this break of pressure to the downside created a buying area here. Short-term, very short-term buying area. But as you can see, price tested it, and then we started to head off. Now, if price was going to continue moving in the upside direction, I would expect this trend line to hold. But instead, it broke. It's coming down, retesting this area. If this breaks here, I'm expecting a move to the downside. Okay? So that's what I am watching for in the weeks, in the days to come. All right. So any charts you guys want to take a look at? Let me see. Go through my list here. Nothing that has been specifically mentioned by you on here. Let me take a look at here. Let's see. CAD yen looks more interesting on Google. Okay, we'll look at CAD yen. No problem. We'll go to CAD yen. I was actually looking at that one this morning. CAD yen. Let's open up a chart here. So CAD yen has contacted an institutional supply area. CAD yen was a good long, okay, and we had a good long signal down. Let's see, down here, okay. Here it was our CAD yen long signal, all right. We had initial targets here, and then we had our long-term target here, which you could see got contacted right here. It was contacted, price dropped, and now we're slowly moving back up again. Now, You know, when we look at the US CAD, we're not seeing anything really aggressive in terms of direction. And that's taking into consideration the CFTC data. So Japanese yen, we believe we're going to see more upside, right? But the problem with that is when you have a massive area of supply coming into play, you really shouldn't be buying, okay? If this gets taken out, fine. Away she goes. Because that massive supply that is likely going to hold price down is in play. And buying when supply is in play is not a good idea. So another thing that you can do is wait for it to react to the downside and then buy at newly formed demand zones. But when I'm looking at the charts, I don't see any newly formed demand zones. So I'm not really seeing any reason to be buying this thing at this point. All right, so that's kind of what I am seeing at this point. All right, ladies and gents, that's pretty much it. I will let you go. I hope you enjoyed this one. Hit the like button if you like these morning sessions. And I really appreciate it. The more likes I get, the more incentive I have to continue doing these shows for you. So I really appreciate your love and support. All right, I hope today was helpful. Go get them. Don't do anything crazy. And we'll see you guys soon.